Welcome to the Merlin Crypto Market Update located on the X app. I'm Abs, the host and senior engagement officer at Merlin, and today's episode features a replay from our Merlin X Spaces. Every other Tuesday at 8:30 p.m., you can catch us live on the X app at Get Merlin Crypto. We dive into captivating discussions about cryptocurrency and blockchain technology with our engaged audience, special guests, and the founders of Merlin. Please note, these spaces can sometimes experience technical hiccups and end suddenly. It's all part of the experience. Thanks for tuning into the Crypto Market Update, proudly brought to you by Merlin, the smartest way to track your crypto.
All right, everybody, welcome to tonight's X Spaces from Merlin, the smartest way to track your crypto. Tonight's episode is BTC and altcoin holders. Here's what's next with special guest Mark Yusko. My name is Jeremy. I will be the moderator this evening as well as one of the co-hosts. I am the Chief Finance and Operations Officer for Merlin. You can follow me on social media at Age of Jeremy, wherever you get your social media. Your host this evening is always the amazing Abs, Merlin Senior Engagement Specialist, and also the host of the Good Morning Crypto Show. The Good Morning Crypto Show comes to you Monday through Friday at 11 a.m. Eastern from the 3T Warrior Academy YouTube page. You can also follow Abs right here on X at 3TGM Crypto. These spaces are brought to you by Merlin, the smartest way to track your crypto. Not only can you use Merlin to track your coins across wallets and exchanges in one simple, secure web app, Merlin also allows you to set up exit strategies for your coins so you know when it's time to sell. Please follow Merlin here on X. You can also follow Merlin on LinkedIn at Get Merlin Crypto. Again, that is at Get Merlin Crypto. You can also find Merlin on Instagram and on Instagram threads at Merlin_crypto. Here on Merlin X Spaces, we enjoy debate, but please keep it family friendly and please be respectful. We want these to be an inclusive atmosphere. The views and opinions expressed in this program are those of the speakers and do not necessarily reflect the views or positions of any entities they represent. Our special guest, we are getting in here shortly, is none other than Mark Yusko. Follow him here on the X app at Mark Yusko. He is an American investor and hedge fund manager. He is the founder, chief investment officer, and managing director of Morgan Creek Capital Management, an investment management firm that advises pension funds, endowments, and wealthy individuals. Yusko is a frequent commentator on the alternative investment industry, and he has appeared on shows such as CNBC, Bloomberg TV, Fox Business, and other major networks, as well as in newspapers, including the New York Times and Wall Street Journal. He is also a frequent guest and friend of the Good Morning Crypto show. If you have questions or want to be a part of the conversation at any time, please raise your hand or chat your question, and we will get to you in due time. And without further ado, Abs, take it away.
Thank you very much, Jeremy. And we got a bunch of exciting news to talk about tonight. But Johnny, the article that's got everyone's attention right now is BlackRock tokenizes their money market fund on Hedera, and HBAR's chart hasn't stopped moving since. And I'm looking at it right now. Just on the daily candle alone, we went from 8.5 cents all the way, and this is yesterday because it closed about an hour ago, to 15.5 cents. That's unbelievable. But I think it goes to show what can happen during alt season. So little positivity tonight. How you feeling, Johnny Crypto? And then we'll kick it to Gonzo.
Abs, I'm feeling great. And good evening to all the crypto maniacs out there. We love and appreciate you guys for showing up every day. And Abs, yeah, it is exciting. There's no doubt about it. It is alt season, and alt season times great news like that is going to put things on steroids, and things will start pumping, I'm sure. But it is very, very interesting news. We know that BlackRock is all about tokenizing everything in the world, and any blockchains or anything mentioned with tokenization and BlackRock is going to skyrocket. So it is great to be here very, very early on in this crypto space. I'm excited, Abs.
Thank you, Johnny. And we're going to kick it to Gonzo. Gonzo, what's your reaction to the news? How you feeling tonight?
I'm feeling good, man. It was a good day today. I got to do this show, and then I just been kind of prepping for the Freedom Conference, getting my presentation all tweaked and just ready to go. But yeah, that just goes to show that, you should build conviction into these projects that you have. Do the research, build conviction. Don't get shooken out. I'm watching the chart right now, and off that candle wick at the bottom that we had, that major flush out we had because of Bitcoin dominance, like 2 Saturdays ago, we're up 160%. So if you were DCAing and you had if you were late to the party and you DCA'd on that Saturday when there was max fear in the market, you'd be up 160%. If you were DCAing in the bear market, you're up by even more, right? So it's all about having conviction and just kind of just being patient, not chasing green candles, FOMOing in, and just eventually, that rotation of capital will come along and pump that price up.
Johnny, I want to go to you because when Mark Yusko gets here, we're going to start talking about the Bitcoin halving. But one of the things that I'm noticing when I'm looking at the altcoins is a lot of them, because of the weekend we had, not the Bitcoin halving weekend, but the one prior to that, that is where we got the washout on the altcoins. We saw projects like AVAX go from $60 to $29. We had Quant Networks trading at 87. There was a bunch of opportunities in the altcoins, and they still haven't fully recovered. So I think a lot of momentum is going to come into the market over these next 3 to 5 months. I break down the data constantly with you, Johnny. And what do we know? The Bitcoin halving always leads to huge green candles for the altcoins, but that's typically 6 to 9 months after the event. Hedera's got that front runner advantage with the BlackRock news, but I think it's a little bit of insight into what could happen during alt season. What do you take away from some of the news we're seeing today, as well as the washout on the altcoins from 2 weeks ago?
Yeah, everything's different, Abs. With the Bitcoin ETF coming up front running the halving, it kind of changed the game. So, to be honest with you, I don't put a lot of weight, and I know everybody else maybe might think differently, and that's fine. But I'm not putting a lot of weight into the historics anymore. I mean, yes, I'm going to look at them, and yes, I'm going to check to see if things follow that, but I'm not expecting it to follow it. I'm expecting something different, and I don't know what that is because nothing's going to surprise me at this point. But I just, it's a different situation. We have different amounts of liquidity coming in now from different places than we've never had before, and that is mean things are not going to necessarily be the same. So I don't get hung up so much on the history or what we expect anymore, Abs. I just look at where we're headed in the future is headed towards blockchain and tokenization. There's no question about it. And right now, the only thing really holding us back from getting there, Abs, is regulation. And then none of this is going to really happen and really start to take. Or you want to see a bull run? Wait till we get regulation. You're going to see a bull run like you haven't seen before because you were in diapers in '97 when this was happening the first time. But when you get regulation,
Johnny was in his mid-60s for somehow.
yeah. There you go. I was 93 actually. I was 93.
Like the time that you went into the bank.
Jeremy, there's
That's
a great
right.
saying for that. It's called "Boom Roasted," Johnny Crypto.
Yeah, that's why I guess
I'm playing with you, Johnny.
I think he felt he had to come to your defense, Abs. You should be proud. You've got a champion out there covering your back. But at the end of the day, I forgot where I was going with this now. So we'll just have to pick it up later.
You were
My
talking about how
apologies,
you're not
everyone.
looking
I
at the
sidetracked to Johnny Crypto.
Just to remind you, I'll let you close it out here, Johnny. What you said is that you're not looking at prior data from the cycles. You're focused on real world adoption because that's what seems to be coming into effect right now. Now, obviously, the projects that we talk about all the time are XRP, HBAR, Algorand, Quant Networks, XLM. These are all quad projects that are going to profit off of tokenization. So, with that being said, maybe you can close it out.
Oh, I know what I was saying. Regulation. Yeah. So at the end of the day, what I was saying is, we're expecting like a bull run, right? Every 4 years, the bull run. But the reality is, when this becomes a real, legitimate, investable space, not just a get rich quick speculative phase, but like regulation will change the game, and it'll legitimize the space. It'll let real innovation happen, and boy, you will see real money that's sitting on the sidelines come into this space. And I gave an example on the show today or yesterday that I was talking to some guys who work in an insurance company, and they were talking to their bosses about trying to get them to move into the blockchain space, and the owners were like, nope, not doing it, because A, there's no regulation, I don't want to get sued, and B, my competition's not doing it yet. But when regulation is there and people are no longer scared, well, some of the competition is going to start doing it, and that's when then everybody else is like, oh, if they're doing it, then we got to do it. And dude, it just becomes a massive snowball effect, and that's when you'll see a bull run like you've never seen before.
Gonzo, I want to get some thoughts from you too, because I'm reading this BlackRock article right now. And what's important to know is they don't disclose how much money was tokenized out of the US Treasury. So we're seeing the price chart go crazy today. It's up over 100% in the last 24 hours. We're at a slight pullback, so it's about 95% now. But even looking at this article, I don't see why it would cause the price to go this parabolic unless it was speculative people coming in. What do you think about what we're seeing right now on Hedera?
Yeah, I mean, that's exactly what it is. They're max bidding it up, right? Look, I spend a lot of time staring at the charts. And so, I mean, I like to look for those patterns. I can tell you that the ETH Bitcoin pair has done the same pattern all three cycles, right? And we just lost the support where we make a high, we set the low, we make a higher low, and then we spend the rest of the time going down, going down, going down. We go up and down, right? Where, ETH rallies and it comes back down. And then eventually we hit that support. And on the fourth touch, we break down. And that's what ETH Bitcoin just did. It just broke down, right? So what I'm expecting is that this summer we get the ETH Bitcoin pairs to finally kind of bottom out. I think it's going to coincide with something that happens with the Fed, right? Looser monetary policy, because we saw the same thing in 2019. And then we go up from there, right? So, yeah, I mean, like what Johnny is saying, though, like he's right on with the regulation. Until we get regulation, then a lot of this is still a lot of narrative driven and speculation, right? And this is just another example of it. You see the media throws that story out and now everyone's max bidding HBAR, right? And so that's why we say The best time to get in is when the market is in max fear or it's boring and no one was paying attention, right? No one was talking about H bar, right? How much time did it spend at the bottom at those lows in the bear market? And even now, right? It was at the lows. Those are the times the dollar cost average. Not now, right? Not now when that you got a huge 160% candle. And what's sad is that a lot of people are going to start FOMOing into H bar, and we're probably going to get some type of correction, right? Because Bitcoin dominance is still really high, right? I still expect it to go to 60%. And until Bitcoin dominance really collapses and comes back down, then I don't think we're going to get an alt season.
And that's interesting, Gonzo. So one of the articles that was going around on Twitter yesterday was the New York Stock Exchange asked market participants how they feel about running 24 hours a day. Johnny always says it's like a WWE show. We wouldn't know that this article was leaked unless they wanted it to be leaked. Johnny, do you think there's any chance that in the next 2 to 3 years, we see 24/7 trading on the stock market because of cryptocurrencies and blockchains?
Yeah, I think that's possible that could happen. I don't know the time frame, but the main, right now it's very difficult to do because the settlement times for currency, as you guys all know, takes 2 to 3 days, and so the banks and the stock markets tend to, even when you trade, you still see some of your trades will not actually, the money isn't actually in your account to be able to use until, say, 2 or 3 days later, or you can't actually withdraw it. I think when we move to a world where it is almost instant settlement times, and instant, data tracking or instant, completion of transactions, where like Larry said, all the CUSIPs will be tokenized of all the stocks, and it'll be so easy. Like literally everything happens instantly in the background. Then there's absolutely no reason at all, abs, at why the stock market can't do what the crypto market's doing. I think that's the vision for it. I think that's where we're headed. That creates a 24-hour, 7-day a week, market now that's open, which means all those exchanges get to make more money because people are trading around the clock. Yeah, to me, I think we're absolutely headed there. I just don't have a time frame on it because, again, it cannot and will not happen until we have this whole industry, regulated. So that regulation, as I told you, is going to be the linchpin for everything. Nothing's going to happen until we get some kind of stable coin clarity. I think it'll start with that. That may be enough, or that may trigger a bunch of other regulation. But to me, I think we're going to need that first stuff to happen.
Johnny, real quick, I want to kick it back to you for this question because I was just thinking, for a long time, me and you have debated on the show, is this utility or is this speculation? What we're going through now with Bitcoin reaching 70K, the altcoins following, well, it seems like when it comes to Hedera, this particular day is a little bit of both. It's like Gonzo said, we got some really exciting news. Now we have tons of speculative investors maxing out their leverage on exchanges right now and pumping up the value of the token. There's going to be a day when this happens for any project that's adopted by a company like BlackRock. And so the question that I have for you is, in this cycle, I'm talking about from now until the end of 2025, do you think it's a speculative run or do you think it's going to be a utility driven run based on things like we're seeing today?
Well, as I told you in the past, abs. And by the way, I see we got Zach Rector in the house. I want to give a shout out to our man, Zach. Zach, I'd love to have you come up and speak with us. So if you would like to join us, please do. That'd be awesome. But abs, I've told you in the beginning where I'm at. And a lot of people think we're already in utility. Being a technology guy and what I do for a living, I don't think we're anywhere near utility. We're totally in the speculative stage, but we are in the start of utility. Utility is getting started, but you will never get the full blown utility until you get regulation first. That will unlock it, and then you'll have a shit ton of innovation that's going to happen to be able to drive the utility that you guys are all talking about that you want to see. And that utility, that whole period from speculation to utility is typically a 12 to 14 year time frame. So nobody's going to want to hear that either. But that's just what it takes before the whole world is operating and working on blockchain technologies, on all the back end systems, because that's what a lot of blockchain is. It's going to be a lot of back end system development, and you're going to see a lot of, you'll see front end products too, but it's mainly back end where a lot of this stuff comes into play. And so for the whole world to get to there, yeah, we're multiple years away. to full-blown utility. But again, don't get me wrong. I'm not saying we're not at the start of utility. We're there. We've started it. Ethereum's proof. Solana's proof. But I'm saying for the whole world to be running on this and full-blown utility, we're many, many, many years away, in my opinion. But I'd love to hear what everybody else thinks and see if we get a few people to come up here and chat with us.
Hey, Johnny. So when you say 14 years, what time are you saying that started at? So 14 years from today, 10 years from 2020, like, could you give an idea of like what that time frame looks like? And from when you're looking at that 10 to 14 year period.
Yeah, so that's a tricky question, right? Because Ethereum, some of that utility has already started, and you could argue has been into play for a few years. But if we're talking about real world back end system solutions for cross border payments, and the whole world running on those, and tokenization efforts, and the whole world being tokenized, and all of that, that's those things are still right now in the process of just doing trials and tests. So that has to finish. Once they figure that out and decide which way they want to go, then they actually build, full-blown systems, not prototypes. And then you have to debug them and get those out there. And then the world has to adopt and use them and spread them. So, you can argue that we're maybe a year into that, maybe 2 years into that. I'd say we still have a good, 5 to 10 years, because I think it'll move faster, because we're just in an age where everything moves quicker nowadays than we were back in the 90s. But I still think, to see the whole world get fully tokenized and see everything running on blockchain, yeah, I think easily, 10 years away for all that to be happening where everything's on blockchain. But the cool thing is, Jeremy, between now and then, a lot of building is going to happen. A lot of speculation and excitement is going to happen. And so you want to be investing early into these things. You don't want to be waiting until, we're at full-blown utility. That's too late. You want to be getting in now while it's early.
Yeah, absolutely. And I just want to remind everybody that you are more than welcome to raise your hand and come be a part of the conversation. We would love to hear your thoughts on any of this or to ask some of the questions. And two, in case you're unaware, 3T Warrior Academy is having their Freedom Conference this upcoming Friday and Saturday. And if you have tickets to that or want tickets to that, you still have an opportunity to get that. Just reach out to one of the likes of Abs, myself, or Johnny or Gonzo, and we can get you a link to get one of those purchases. Merlin is sponsoring the 3T Warrior Academy, and Johnny Crypto, Gonzo, and Abs will be there talking about Merlin. Will have a booth there. And also exciting, we're also going to have a booth at XRP Las Vegas, and we have some cool announcements that will be coming up about Merlin around that time or after that time. So if you want to see some of the Good Morning Crew, you can also definitely check us out at XRP Las Vegas. That will be taking place on the following Friday and Saturday. So that will be the 3rd and the 4th of May. So that would be awesome too if you're in, if you have tickets to that and you're in the Las Vegas area, to come and hang out with us at the Merlin booth. Back to you, Abs.
Jeremy, one of the things that I'm sitting here thinking, and I'm listening to Johnny, one of my closest friends, discuss the thing that we talk about almost every day. And yet I feel like I still can't get a solid answer out of the guy. The question that I asked was not full-blown utility, not global utility. This cycle, do you think this is going to be a speculation-driven cycle, or is it going to be utility? Because even like Gonzo said today, this Hedera thing, I think, is a perfect example. It's a small case of real-world utility, but people will use that to speculate about the future of that blockchain. So they're pricing in the future now based on the small/relative news that we're seeing today. I think it's a really, really interesting thing. And I think it's what's going to happen throughout the rest of this bull run. That's why I'm highlighting the point. Whether it's like an XRP ETF, the narrative itself will drive the price. So that's what I think is really, really interesting about what we're seeing with Hedera. We're going to be able to apply this to Algorand, Quant, XLM, XRP, whatever altcoin is grabbing a headline for that week, that short period of time. We're going to see huge momentum because of the speculators. And that's kind of what I wanted you to elaborate on just a little bit, Johnny. We remember it from last cycle, but this cycle could be that on steroids because the things that you're saying. We're just a couple of steps from real world utility, but we're not there. So that gives the speculators maximum opportunity. Maybe it could be a little bit different. I don't know. Maybe you disagree. What are your thoughts?
Well, I'm not so sure what part you didn't understand of what I said. I've been saying it for years. We are in speculation phase. I'll say it again. Speculation. Did you hear that? Or do you need me to repeat it again? Or is that very clear?
Don't break my heart, Johnny.
Have
So
I
when
not
is
been clear? No,
speculation
you came
over?
up.
When is speculation period over then?
He didn't ask me when speculation was over.
No,
He
but
asked
I'm
me.
asking you.
Well, hold on. Let me answer one question at a time, for heaven's sake. He asked me in this bull run, what do I think it's going to be? And I don't know how I got to be any more obvious. I've been telling you all that for me, this is a speculation bull. We are in speculation, guys. We are nowhere near full blown utility. And I wish Yusko was here so he could speak to it more. But I can tell you, we are in speculation, in my opinion. Right? That's where we're at. There is when dog with a hat is the higher uh, is higher than he's got a $3 billion market cap, and it's higher than a lot of other tokens for real world utility. Or real world solves. We're sitting in a stage of speculation. It's just a no brainer to me.
Fair enough, Johnny. And Gonzo, I want to kick it to you too. I feel like we haven't heard from you in a while. What are some of your thoughts? Speculation, utility, whatever you'd like to say.
Yeah, I think I've said it a couple times on the show. I think we're still in a very speculative market, a very narrative-driven market. I believe that we will not see true utility until we get regulation. And I know regulation sucks, and a lot of people think that we don't need rules to the road or we don't want to be overregulated. The problem is that we are getting innovation, but you're not going to get true institutional innovation until there are rules of the road, right? Because the last thing that they want to do is start building some company, right? Put all this money into it and then have the SEC drop a Wells notice on you, tell you that you're breaking the law, right? When you thought you were following your law. Because regardless of what Gary Gensler says, how he acts that the crypto, like that our space is all like, people that are trying to be nefarious and rip people off and all of those things, that's not true. Most people don't want, most businesses, most protocols, projects, whatever it is, do not want to go foul of the SEC, right? They want to do things the right way, just like Coinbase was trying to do, just like Ripple was trying to do, right? So until you get actual rules of the road so that they know that they're not going to cross some line or potentially get in trouble, we won't get that true explosion of innovation, right? And so that's why I've always believed, some people think like, oh, this is going to be the last cycle. I don't believe that at all, right? Humans are going to human, right? I've said that before. And because this is speculation and it's narrative driven, it involves your emotions, and we're going to still kind of see how these cycles play out. And so far, they've been different a little bit, but they've been still kind of playing out how we've seen in the past, right? They're always going to be a little bit different, and the market always right. The market is set up to shake you out, right? So it's always going to do something a little bit different. If it was easy to everyone always says, okay, well, buy low, sell high. If that was easy to do, we'd all be rich, right? So the market always has a way of either manipulating your emotions or just manipulating you with price action. But I definitely think we've got one more cycle in it, and it might be, maybe like Johnny says, it might end up being the biggest cycle because we get regulation, or maybe because we were speculative before, that's the bigger run, and then it gets a little bit more kind of tapped down when we get actual regulation because the speculators have left.
Yeah, absolutely, Gonzo. And as much as it pains me to say this, I've worked with Johnny for a long time, and he's usually right. So you might be right on that. And humans are definitely going to human. And that we have a human with their hand up. So, Nerdy, if you would like to ask your question or add to the conversation, we would love that.
Hello, human from Earth. Exactly. So there's a few things. One thing is exactly what Johnny was saying is that everything is gonna be in the back end. I was watching this interview with Christine Choi. People don't know who Christine Choi is. She's the one who developed the on exchange for JP Morgan and JP Morgan Coin, and she was saying herself that eventually, 3 to 5 years from now, we won't even be having any kind of blockchain conference because everything will just be done by then and everything just be on the back end running. The second thing is that a lot of these Fortune 500 companies, they have to have compliance in order to even think about integrating any kind of anything. So compliance is a huge thing. Last thing is that we won't see anything, and probably most likely everything will probably end with Congress because there's a lot of we have a liquidity crisis, and then there's a lot of funky things going on with the SEC and with the Fed, and we all know that the FDIC cannot insure anybody. We see a lot of banks closing down, so It's going to be an interesting time, but I believe it's going to be like I believe at the end of the day, all this stuff that's we're invested in will probably be a solution to a problem that's we already see coming. But yeah, that's it.
Thank you, Nerdy X. No, I think you're spot on. There's a couple of things that I think you're right about, but I want to hear your opinion on this. So today we discussed how Stuart Alderati and Brad Garlinghouse are prepared to take the XRP case to the Supreme Court. And there was a prior SEC official who was talking about how she believed that either Coinbase or Ripple would be forced to go to the Supreme Court so they can get a definitive ruling on digital assets. So it's for a long time we've thought clarity's coming through the courts, and that could mean what we're seeing with Judge Torres and the SEC, but it looks like clarity may actually need to come from the Supreme Court. And if that's true, even if a stablecoin bill is passed, let's call it this fall, it could take another 12, 24 months before we get some serious definitive clarity on digital assets. And so, I don't know, you sounded like you knew a lot. I'd like to hear your opinion. What are some of your thoughts on the matter?
Um, well, if we wanted to stick to like actual things that we can prove, we know for a fact that there's been a few bills introduced from the Senate, and there's been a few bills introduced from Congress. So you have like whatever bill, and then you have the HR bills. A lot of those bills had to do with returning back to gold. The other one was a stablecoin bill. The other one was digital wallets for all. So they already have the bills in place. It really comes down to again regulation, but also exposing the blatant corruption that's happening already. Without all of that figuring itself out, nothing is going to happen. So we might see something happen within the next few months. Who knows? Another thing I want to add is that with the Citibank documents, they say them. So Citibank Module Loop and the clearinghouse documents, they all say that springtime there would be implementation of regulation. So from April to July, probably from now to July, we'll probably see some things happen. If you go to the Swift website, the Swift says that CBR Plus implementation is 24, 25, and 26. But they say by 24 was like an implementation phase, regulation phase. So they have 3 phases. And then the 25 phase is like everyone has to get on board. But if you're not on board by, December 31st of 25 going into 26, then you can't even operate without being in compliance. So ISO is a big thing. It's a big transformation, but at the same time we have to understand that it's not just a transformation that's going to affect one sector, it's a transformation that's going to affect all sectors.
Yeah, absolutely. Nerdy, thank you so much for that. We appreciate you coming up and sharing that with us as well. And again, we encourage everybody that's a part of this. We want people to be a part of the conversation. So please raise your hand and you can be a part of the conversation. And you can also ask questions. And I am very, very happy to announce that Mark Yusko has joined us. Very appreciative that he was able to make the time to be a part of this. We truly enjoy his company as he is part of Good Morning Crypto or on Good Morning Crypto very frequently. And if you don't know who Mark Yusko is an American investor and hedge fund manager. He is the founder, chief investment officer, and managing director of Morgan Creek Capital Management, an investment management firm that advises pension funds, endowments, and wealthy individuals. He is also a commentator regarding alternative investments and in the alternative investment industry, and has appeared on shows such as CNBC, Bloomberg TV, Fox Business, and other major networks, as well as in newspapers, including the New York Times and Wall Street Journal. And if you watch the Good Morning Crypto show, I am sure you have seen him, as Abs and Johnny love to have him on. And so without further ado, I'm going to kick it over to Abs, and then Abs can take it away from here.
Thank you so much, Jeremy. And Mark, I guess we can skip the introduction since Jeremy did such a great job. So I just want to say thank you so much for joining us tonight. And how you feeling before we get started here?
Yeah, I'm feeling great, except I apologize for messing up the clock and being late, but better late than never, maybe. But extreme apologies to everybody. So go ahead.
Mark,
Exactly when you were supposed to get here, sir.
Mark, don't ever feel like you have to apologize, buddy. We appreciate that you're here. And you know what? Forget the clocks. Throw those things out. Who needs clocks?
Well, no, I mean, I heard that you should never ruin an apology with an excuse. So I won't do that. But I'll just apologize, but I will give you a little explanation, which is kind of a funny thing on myself. So today is the first day of my life post my assistant Pam. 23 years we have been together, and today was her first day of retirement. So I'm not starting off very well on the time management
You
front.
know, Mark, it's funny. I got an email, an auto email because I had sent you a message earlier today about a reminder, and it came back and it said a note from Pam saying, "Today I retired." I'm sitting there like, "Oh my God, Mark's in trouble." Yep.
Yeah, I'm in trouble, but I'm in trouble. But if anyone listening happens to be in North Carolina and is looking to work in the crypto industry, let me know. But crazy. I will get through it. I will get through it.
Well,
But
Mark, if anybody's smart, they're going to capitalize on that opportunity. I'll tell you that
That's
much.
what I was just going to say. I was like, Johnny, I think I'm going to go to the Carolinas, sir. I'm just kidding.
I already booked my ticket. I'm on my way down the north. You're too late.
all right,
So, Mark,
I
the
love
big
all
the
right.
big topic of tonight was the H bar and BlackRock tokenization article, but we haven't talked to you since the Bitcoin halving, so I'd love to start there. First of all, what was your reaction to just how the whole event took place? And we covered some stats earlier in this show in particular, where we said 1 month after the Bitcoin halving, it was down 10% the first cycle. Sorry, up 10% the first cycle, down 6% the second cycle, and up 9% the third cycle. So there's not a huge variation in price 4 weeks after the event. But 12 months after is when you get this radical change in price action. Every cycle we've seen Bitcoin, the first one, it was 8,000%. The second one, it was about 250. And the third one, it was 550% in 2020. Those are some substantial gains. So I just wanted to hear your reaction to how the Bitcoin
Big numbers.
exactly
Big
for
numbers.
sure.
I mean, look, the bottom line is the halving is hard coded into the process, and I believe it was put there to do exactly what it does, which is create price interest, which creates increased usage, which creates higher network value. Now, what I mean by that? I mean, if you think about it, so on Thursday last week or Friday last week, up until about 9 o'clock, there were about 900 Bitcoin minted per day, and the miners were earning those rewards. At 9 o'clock on Friday night, that got cut in half to 450. Now, those miners, still the same number of miners, still the same cost of electricity, same depreciation on the machines. Suddenly, some big percentage of them would be bordering on bankruptcy, right? So what has to happen? Either a bunch of miners go out of business or the price moves. Historically, in the previous cycles, the price has moved. Now, there was one big difference, and you hate to say it's different this time, but it is different this time in that with the creation of the Ordinals protocol by Casey Rodamore, and now with the release of the Runes protocol in block 840,000, we now have a much higher level of transaction fees. Well, why do we have that? Well, what Casey created, and it's pretty amazing that a single guy, and I'm sure he had some help, but pretty amazing that he built these two protocols. Basically said that there's this excess block space in these old blocks, and you can inscribe information, pictures or data or little programs into these old satoshis. And in order to do that, you have to have the miners verify the transactions, and so you have to pay them. And he created runes, which is essentially meme coins on the Bitcoin blockchain. Kind of. I mean, they're not exactly. Yeah, it's complicated, and I'm not a techie, but bottom line is transaction fees spiked. I think we set a record 4 times the previous daily record. Probably shouldn't be surprised that prices were a little more stable in the first few days. There weren't these big green candles. In fact, the price went down a little bit Friday night, Saturday, because the miners didn't have a problem. And an overly long. And another piece is historically, we don't get back to fair value having. Well, what does that mean? Well, we can actually calculate the fair value of the Bitcoin blockchain network by the number of nodes and the number of participants and the number of transactions and all the things that go into Metcalfe's law model. And people like Tim Peterson do that, and so we can come up with a number. Historically, after the bear market, we get into crypto spring and crypto summer, and we start to migrate back toward fair value, and then the halving occurs, and then we enter a period where the fair value doubles. Now think about that. Why would that happen? Well, if the number of block rewards is cut in half, the price has to double in order to keep the miners whole. Well, this time the fair value probably doesn't double. It probably goes up 60-ish percent, 70%. I don't know what the number is because the transaction fee offset. But this time we got above fair value. Fair value was in the low 50s. We got above fair value in advance of the halving. So that put even less pressure on the miners to sell. Now it gets really complicated because it's like dominoes, right? You push one and suddenly other things start to fall. Well, if the miners are Bitcoin, but there's a demand shock to Bitcoin, which happened with the release of the ETFs. Well, those guys are going to start scrambling to find spot Bitcoin to buy. So that's part of the reason the price went from 47 K before the approval in January all the way up into the low 70s, and now we're back in the mid 60s. So all of that's to say, I think the halving went just as we should have expected, with these new little wrinkles, the increase in demand, the decrease in supply, and the change to transactions through runes.
Hey, Mark, I got a question for you on that. Comment first. I know one of the things the miners are doing, obviously they have a clear view. The one cool thing that they have that most other industries don't have is they know exactly when the halving is coming. And so they have multiple years to prepare for it. And a lot of them go and do that by, don't forget, we have technology innovations and GPU processors and NVIDIA and they're all working to increase their hash rates, right? And I know some of them have, because one of the things you could do to offset the halving, right, is increase your hash rate. If you can do that and theoretically double it before a halving occurs, then you're basically break even, and you don't feel that effect when that switch comes. So you said something interesting. If the fair value, when you said the fair value of Bitcoin being 50K ish, somewhere in that zone, do you feel that's the fair value before this halving? So that when we get this halving, we go to 100? Or do you think the fair value is 50 now?
If you look at the model, it said, coming into the halving, we were, somewhere in the low 50s,
Okay.
53, 54. And then with all things equal, and you bring up another really important point, that hash rate and computing power and the efficiency of the ASICs certainly goes into this. Like if you can have an ASIC that's more efficient with the same amount of electricity, you can get more rewards. So there are a lot of variables that are a little squishy, but at the end of the day, I round down to 50. I double that to 100. I say transaction fees and some of the impact you're talking about with the more efficient ASICs. Although right now, there's not a lot of innovation around ASICs. There's a lot of people promising things. I mean, Jack made a big announcement this morning. Other people are promising things, but Bitmain really hasn't made a big improvement for over a year. So let's call that a neutral. Let's say transaction fees are about a 20% drop. So to me, fair value is like 80, and we're in the high 60s. I think we run to 80, pretty quickly over the next couple months. But then the fun starts, because once you pass fair value and once we get into the kind of the momentum period leading into. I said at a conference a couple weeks ago that I think this is going to be the most fun Thanksgiving ever. Like literally, like you're going to be welcome back. You know, you're not going to be the uninvited guest that everybody hates because you're in crypto. Everyone's going to want to know, how do I get in? What do I do? Tell me what to do. Who should? And we'll probably be closing in on 6 digits. And then we go right through into the mania phase. And the mania phase will last through probably March, April next year. And then we'll have the blow off top and humans are going to human and we'll have a deleveraging and another bear market. But, is it 150? Is it 160? Is it 180? I don't know. No idea.
Johnny Crypto. Sorry, I didn't know if you had another follow up there, Johnny. Before we change topics, any closing remarks on the Bitcoin halving for Mark?
I actually happy and agree with Mark. I think where we're headed with the fair value and where we're going, and of course, once we get that crazy FOMO, it'll pump it up and the whole leveraging of it. I think what is interesting is as you look at what the miners need to do. One of the questions I always go back and forth with Mark myself, and maybe you could tell us what you think is there more value in holding Bitcoin itself, or is there a value in the miners? Because we
Sure.
see, right? If maybe you could talk a little bit about, think about this, Mark. I don't know about you, but I know there's lots of conversations that I'm thinking longer down the road, right? 5-10 years from now, there's a lot of talk about Bitcoin being close to 7 figures, right? So,
Sure.
so wouldn't it make sense? Imagine picking up the miners now in the, where they are today. Do they have an exponentially higher chance to increase because of the profit margins?
Yeah. See, here's the thing. It's again great. It's a great
Curious what you think.
insight. No, it's a great insight, and the return on the miners, particularly last year, as great as Bitcoin was, some of the miners did better. The problem right now is the valuation of the miners is fairly rich. I wouldn't. It's not as rich as Tesla and Nvidia and some of the crazy things they're selling at 30 and 40 times revenues, but the miners had too much of a run last year because people were using them as proxies for Bitcoin because you didn't have the ETFs. So this year, I think year to date, on average, the miners are down fractionally, down 10-15%. MicroStrategy started down, and then there was a massive short squeeze that took it all the way up almost to 2,000 before it corrected back to like 1,200-1,300. And that's a levered play on Bitcoin. So you're basically buying Bitcoin with leverage. And just full disclosure, I'm an investor and I will eventually be a board member. We're trying to replicate this with a little company in Japan called MetaPlanet. So we're going to try to create the MicroStrategy of Asia over there. But it's a pretty simple playbook, right? If you can borrow money in the public markets in fiat, which is a depreciating asset, and you can buy an appreciating asset in Bitcoin, it's a good trade. And we probably won't be able to borrow at zero like Michael can, but we'll see how it plays out. But so that's a long-winded way of saying I'd be careful with the miners here because they are fully valued. The only one that might have a little advantage is Core Scientific. They went into bankruptcy, they emerged, they had a bunch of debt forgiven. They probably have a cleaner balance sheet than the rest. But it's a little more complicated than they are great businesses, and I think they will be good investments. It's kind of like how I feel about Bitcoin. I I love Bitcoin as an asset, right? As the base layer of the new era, the trust net or the truth net as I call it. But at the end of the day, you know, if we go to gold equivalents, right, which is about a $7 trillion market cap, that's a 5x from here. It's perfectly good, but it's not going to, it's not create generational wealth. The generational wealth was created by people who, bought really, really early when there was a risk that it could go to zero. There's zero risk it could go to zero at this point. None. I mean, well, unless it turns out Satoshi is the NSA and they dump it all to crash it intentionally. But I don't think that's the case. But um, look, I think there are a lot of things in the digital landscape that are going to be great investments. I think Bitcoin is a core investment. It's a blue chip. Everyone should own it, but it shouldn't be the only thing you own. There are plenty of other things, and the maxis get all mad when I say that, and they're like, "No, it's the only thing," and all those other shit coins. And I'm like, "Look, you don't have to like what Ethereum is, but Ethereum has a different function than Bitcoin. Bitcoin is not a world computer. Ethereum is a world computer. You don't have to like Solana because it crashes all the time, but it's a faster, cheaper world computer. Now, can they fix their problems with crashing and transactions vaporizing? I don't know, maybe. But I do know that there are 2,000 dApps being developed on Solana right now, and that's starting to catch up to Ethereum. So it's pretty interesting. And someone said to me, and I think I talked with you guys on the show, if Ethereum didn't exist and it was invented today, would anyone use it? Because it's more expensive and slower than Solana. I don't know. They might, but given the choice of speedy and cheap. Now the question is, it's like building a house: good, fast, and cheap. Pick two. You can have it good and fast, and it won't be cheap. You can have it cheap and good, and it won't be fast. And you can have it fast and cheap, and it won't be good. And that's kind of where Solana is today. But um, they will, I believe, fix some of the defects. And there's this firm I love, a couple of young guys called Permian Capital, and it's a hedge fund. Used to be out in the Bay Area, now they're in Park City, and they had their call today, and they were talking about one of the AI tokens that's built on top of Solana, and you can basically take and we're going to do it with my son's computer. So I texted my son today. I said, "Will, we're gonna connect your computer with this giant video board. I mean GPU that I bought him for Christmas that he plays. He plays for a couple hours at night, but during the day when he's at school, we can rent it to the network for people to solve problems on and get paid tokens. It's a pretty cool idea. And this company's got a $400 million market cap, and could it be a multi-billion-dollar market cap? Probably. So there's lots of things going on in the ecosystem that are going to be great investments. And that's a long, winding answer to your question about the miners.
Hey, just one last question to follow up on that. Do you envision, just like we had back in the 90s after everything started to bust, will we see a consolidation of the miners at some point?
Oh, for sure. We already have, right? I mean, there are a couple miners that are the big dogs, and I think, look, when this all started in 2009, there were kids in their dorm room on their laptop. There were literally tech bros working at big law firms in New York, stealing electricity at night in the back office until they got busted. And you could buy a little USB miner, plug it into your machine, and make 50 Bitcoin every 10 minutes. I mean, it was glorious. Today you need multiple millions of dollars of equipment, and you got to figure out how to do liquid immersion cooling because of the heat problem, and you got to move to Antarctica. I mean, not Antarctica, to Iceland or Antarctica. So it really does favor the large, but that's the way data centers are, right? In the early days of the internet, everyone and their sister ran an ISP out of their basement, and now you got a handful of big major data center companies that run the internet, and Microsoft Azure and AWS basically control everything for now.
Johnny Crypto, I'm going to ask Mark one quick follow-up question, then we're going to go to some other people here. But Mark, one of the things that you had mentioned is Satoshi, and I'm not going to ask you who you think Satoshi is, but do you think the public will ever have more insight into who Satoshi was? And if you do believe that to be the case, do you think it will affect Bitcoin in the long run?
Well, it's a loaded question, right? So the fact that Satoshi is, anonymous is one of the great gifts to the protocol. I mean, we don't have, it's like what they said, they had a picture of Zuck to Congress, and they said, they subpoenaed the CEO of Bitcoin, but they were unavailable. So, there's no face that the government can go after. There's no control. I mean, think about it. This is a $1.3 trillion asset that has no marketing department, no business development department, no CFO, no COO, no CCO, no CEO. I mean, it's truly dazzling. And I think that couldn't have been possible if there were a named face. And so, look, there are a lot of theories on who Satoshi is. And, when I first started down the rabbit hole years ago, I told you guys this story. I did what most people do. They Google Satoshi Nakamoto, and what came up was Intelligence Central, because Satoshi means intelligence, and Nakamoto is the surname of people from the central provinces of Japan. And so I'm like, that's too close to CIA, NSA. And so for a while, I was like, well, what if that was it? What if NSA created it because they knew the dollar was dead, and they wanted people to convert the dollars to Bitcoin, and then they had a back door and they just stole everything at the end and crushed it. And so, we have the luxury, and it really is a luxury. One of our venture partners at Morgan Creek Digital is Scott Stornetta. Scott, if you recognize that name, he invented the term blockchain in 1991 with his partner, Saber. And they are cited 3 times in the white paper. There are 8 footnotes. 3 of them are Scott and Stewart. And so I asked him once, I said, Scott, you were kind of around these cypherpunks when they were building this thing. Do you know who Satoshi is? And his standard response when someone asks him that question is he starts speaking fluent Japanese because his wife's Japanese. And he says, well, I might know who Satoshi is, but if I did, do you think I'd really tell you? And since you don't understand Japanese and you don't know what I'm saying, I'm just not going to tell you. And so I said, so do you think it could be uh, this NSA theory? And he thought for about 10 seconds and said, no. I'm like, what do you mean no? How do you say no that fast? He said, well, I never really thought about could it be the agency. But to your point, if it were, the way you're thinking about a backdoor is impossible. Bitcoin is air gapped. So now Ethereum have a backdoor, but Bitcoin can't. And so anyway, so that was that. So the other theories are that it was a multi-sig wallet, and Hal Finney was one of them, and because he passed away, you can't open multi-sig. So there are a lot of theories. I mean, Adam Back was there at the very beginning. Does he know? I don't know. We're actually interviewing Adam maybe tomorrow even. So I'll probably ask him. But uh, look, I think it's better that we don't know. And I think the one thing that I do worry about, and it's the only thing I worry about with Bitcoin, is if the Satoshi wallet were to actually move coins, I think that would be bad. I think that would cause me concern, because then I would think that that does mean it's probably agency related. Because at this point, I I think whoever it was, if it were some random coder, uh, they've made the decision that it's better for the community to disappear. And I think today, actually, Abs, I think it's interesting you're asking this question today. I think today is the anniversary of the last message from Satoshi on the message boards, basically saying, I'm going to move on to other projects.
Yeah, thank you so much, Mark. And real quick, we're going to go over to Cole to ask a question, but Cole, just hang tight for one more second. We just want to remind everybody that this Spaces is brought to you by Merlin. Merlin is the smartest way to track your crypto. Not only can you use Merlin to track your coins across wallets and exchanges in one simple, secure web app, Merlin allows you to set up exit strategies for your coins so you know when it's time to sell. So if you're interested in Merlin, go on over to merlincrypto.com, sign up today, and you will get 30 days for free. That's merlincrypto.com, and you will get 30 days for free. Cole, thank you so much for your patience. I know we brought you up to speak. You have your hand up. The floor is yours, my friend, to add to the conversation or to ask a question to one of our other speakers.
Hi, Mark. How's it going? Cole
Doing
from
great, doing great.
Cole from Stanford Blockchain. I'm currently, actually, I was just coming back from the Pantera offices where I'm a research investment analyst.
Awesome,
And
awesome.
yeah, and first of all, it's really cool that Josh Kerman from the firm is looking at. I believe it's probably Nasana that he mentioned if it's 400 mil market cap,
Yeah,
and that
yeah,
you guys are
yep.
mining it. That's pretty cool. Been in that ecosystem for a bit. And actually, Curtis Feeney from Stanford Endowment, he connected with us. He connected us, and he mentioned that he really admires your global macro view on the world. Like you have this really great understanding of how the world moves and how the markets move with it. And with that, I wanted to ask you, what do you think the probabilities are that you have governments buying Bitcoin later in this cycle? Like, is there interest in the Middle East? Is there interest elsewhere? What do you think happens in that area?
Yeah, look, fantastic, fantastic question. So a couple things. One, so cool that you and I have so many connections. I mean, Dan Moorhead, who launched Pantera, has been a friend for 30 years. He's the reason I'm here talking with you guys tonight.
Oh, cool.
He
Yeah, I
introduced
just saw
me.
him today.
Yeah, he introduced me to blockchain and Bitcoin. I would say the same month as the Winklevoss twins, but they're multi-billionaires and I'm not because they were smarter than me. And the two things. One, they were hanging out with Charlie Shrem and I wasn't. They were in Ibiza with Charlie and they had $500 million and I didn't. But other than that, we're the same. Um, but but the real thing is I didn't get it right away. Dan got it right away. It took me a while to really get over my skepticism and to really finally truly believe in it, which I did. But the long story short is that the Curtis Feeney, also buddy for 30 years, one of my best friends on the planet, uh, amazing guy. So I appreciate his shout out. But look, from a macro perspective, what Bitcoin is money. Well, what is money? Money is an asset that exists in the absence of a liability. And there have been multiple, not very many, but a handful of monies over the course of history. There are lots of currencies. Currencies are not money. Currencies are different. Currencies are backed by debt. Money is not have an associated liability. So for 5,000 years, give or take, gold has served that purpose. And by belief and custom, because again, gold's just a shiny gold rock, no different than platinum or palladium, or I mean, it's a little more different because it's a little less, it's a little more scarce. But at the end of the day, by belief and custom, we decided to put gold bars in vaults and call them value. And for that 5,000 years, a single ounce has bought a fine person's suit, from Cleopatra's time to a suit of armor to a zoot suit in the 20s to Savile Row today. And the problem with gold is it's not very divisible and it's not very portable. Like if I had a bar of gold with me right now, which I don't have one right in front of me, but if I went and grabbed one out of the closet and I tried to break it in half, I couldn't do that because I'm not strong enough. But then more importantly, if I wanted to send you half of it, Cole, I couldn't stuff it in my phone and send it to you. If I want to send you Bitcoin, right? It's infinitely, not infinitely, but it's divisible to 100 million Satoshis per Bitcoin. That's why my Twitter handle is hashtag 2.1 quadrillion, because there are 2.1 quadrillion Satoshis, and that's a lot of zeros. So there's plenty of Satoshis for everybody. And it's entirely portable, right? I can punch a few buttons and send anybody Bitcoin anywhere in the world for free, essentially. Not quite free, but close enough. And that's a superior store of value. So what is happening, you know, poor Peter Schiff, and he won't take my bet because he's a chicken. Um, but he'll piss and moan about, Bitcoin going to zero, but gold is the thing that ultimately is probably more likely to go to zero. Now, having physical gold will always have a role because, for that super Mad Max emergency or, trying to escape Germany in the war or whatever, you need to have something that you can barter physically. Um, and, but that's a very small use case. For the broader store of value use case, Bitcoin will be that. And I do think that central banks, like, think about it. What money is the gold sits in the central banks around the world. And then they all issue currency on top of that. And then they basically devalue that currency over time and steal the wealth from the masses and give it to the few people in power. And in the history of mankind, there have been 775 paper currencies. 3/4 of them have disappeared already. The rest are on their way to disappearing. Turkish lira, Venezuelan bolivar, you know, uh, Argentinian peso, Zimbabwe dollar. All the things are basically worthless. And the dollar, the yen, and the euro are on their way. Part of the reason we're doing the Japanese company is the yen just continues to devalue because it's their only way out. When you have a lot of debt, you only have four choices. You can pay it back. All the money in Japan, all the money in the US couldn't pay off the debt. All the wealth, forget all the income, all the wealth, you couldn't pay back the debt. You structure it, but someone has to take the other side. No one's going to take the other side. You can default on it, but then you get kicked out of office, so no one's going to default. Or you can devalue it, which is what everyone's going to do. So there's this race to the bottom of fiat currencies. And so the price of things goes up. Houses, gold, meme stocks, whatever. When people decide to store their value collectively, those assets rise. And ultimately, I believe gold will get displaced as the primary store of value at central banks. And it will get replaced because it's more divisible, more portable. It actually is more scarce than gold today after the halving. And so, again, long-winded way of saying it's a really important question. And someone will be first. It's probably already happening. It's probably someplace like Estonia or one of the smaller countries. El Salvador bought a little bit, but ultimately everyone, just like they did with the renminbi, right? The renminbi was verboten, right? You weren't allowed to touch it because it wasn't an open economy, and everybody said, well, but they're the second largest economy in the world, and their markets are really big, and the currency is really important. So they included it in the SDR, and then everyone had to put a little bit in their reserves. And I think the same thing will happen to Bitcoin. And the guy who really explains this better than me is this guy Murray Stahl. Murray runs a firm called Horizon Kinetics, and I would say Murray makes me look bearish. I'm pretty bullish on this whole sector, and he makes me seem bearish. And he talks about there's something called Gresham's law, and Gresham's law says that bad money crowds out good. And if you look at the history of countries, that's what happened. The bad money crowds out the good money and then flushes down the toilet and the economy dies. Weimar Germany and Zimbabwe, et cetera. What he says is that we're going to have a reverse Gresham's law because we've created, what Satoshi Nakamoto, whoever, I say he, she, they, but it's he because he self-identified once as a he. So what he gave us is the perfect money. It's more divisible, more portable, and more scarce than the best money we've ever had for the last 5,000 years of history. So because of that, people will increasingly decide to opt out. And it's funny. I always, when I'm listening to, I like 70s rock and song Bachman Turner Overdrive, Taking Care of Business. There's time, you get to work by 9, start your slaving job. And the thing is, if you work for a salary, it's a highly charged word, and Jimmy Song says it best, you're a slave. And I let that word hang there because it's true. We are slaves because that money that we're given as our wages is then devalued at the whim of the government through this thing called inflation that they tell us is good for us. How can something that takes half my purchasing power over 30 years be good for me? It can't. So that was created starting in the 1600s by the Dutch and then the Bank of England in the 1700s, and then the U.S. Bank in 1913, the Fed, which is neither federal nor has any reserves, but is simply a private corporation owned by wealthy European families to steal the wealth of the masses through this thing called inflation. So therefore, people will opt out of this slave relationship we have with wages, not all at once, and not with all my money. I mean, I get debates with maxis all the time. They're like, you still have money in the bank. I'm like, so do you. Well, that's different. I'm like, no, it's not. We choose, because we live in countries where fiat still matters, that some portion of how we pay for things like taxes and goods and services is still paid for in fiat. Now, at some point, we'll reach a world where there'll be L2s and L3s, the same way that money works today. Think about it. None of us actually transact in money. None of us carry gold coins around and pay with gold. The gold sits in the central bank vaults. None of us actually use FedWire. We don't actually withdraw from the Fed or take a loan from the Fed. None of us, except on rare occasion once a month, use ACH, right? We don't write checks anymore. We don't. We actually use a Visa or MasterCard or some other card, and that batches our transactions on a mainframe computer. And once a month, we settle using ACH. They settle to FedWire, ultimately down to gold, the money at the central bank. So that same system will be created in Bitcoin, with Bitcoin as the base layer, L2s and L3s and L4s. But we got a ways to go, and that's the fun part. And that's why Pantera and Morgan Creek Digital and ours get to have a lot of fun investing for the next couple decades.
Thank you, Mark.
It's really, really cool. Reverse Gresham's law. Think about that further. Mark, also, I sent you a DM. Do you think we could talk like for 30 minutes? We'd love to talk about what you're doing in Japan.
Yeah.
And yeah, I sent you a DM, by the way.
No. I tell people all the time that I always forget that there are two sides to the DM inbox, and so I just have to go over to the other side and I'll respond and we'll set something up.
Yeah, awesome.
Thank you so much, Mark. And one of the things I want to get into before I kick it over to Dominic was you said nobody writes checks anymore. I have to defend my friend Johnny Crypto. Johnny Crypto still uses a checkbook. So there are a couple of people out there who still use checks. And I'm only making jokes, of course. But Dominic, I'd love to give you a chance to ask Mark a question. Floor is yours.
Sure. Thanks, Abs. Mark, thanks for coming on. My name's Dom. I'm from Miami. I work in real estate private equity.
Nice.
Quick question. So, switching gears to BlackRock and their recent announcement where they're tokenizing assets on Hedera. Just curious to what you think of that announcement. And, I think they're planning to tokenize U.S. Treasuries, and just wondering if you think that trend is going to continue with some of the bigger shops, and what advantages that actually gives a firm like BlackRock to actually
Yeah,
tokenize
look,
assets, right?
it is a quick question, but it's a really important question, and I don't do anything short, but this is actually a really big question. And what I mean by that is, if you think about the world we're headed toward, and if people haven't read the book Read, Write, Own by Chris Dixon, you should read it. And what it explains is, 30 years ago, we all lived offline, right? There was no internet. Imagine that. Imagine living in a world, which I did, there was no internet. I had my Schwinn bicycle, and I rode around the neighborhood, and I didn't check in. My parents had no idea where I was. I came home and the streetlights went on, and that was the world in which we lived. And then the internet comes along, and we move from offline to online. And in the online world, we even moved from kind of read only, where we could read websites and web pages, to read write, where we could interact with apps like Facebook. And those big tech companies built up around that, basically taking all of our data and our information and the things that we provide, like YouTube videos. And I mean, it's really amazing when you think about it, how many millions and millions and millions, probably billions and billions of hours of human creativity and human effort go into producing content for these companies, and they pay almost nothing back to the users, like 3-4%. And their take rate is huge. And what Chris talks about is in Web3 and in this new world of the internet, we collectively can take back ownership through blockchains. Well, what are blockchains? Blockchains are simply computers, right? They're simply operating systems, the same way that our phones run on iOS or Android, or computers run on DOS or Windows, or the internet runs on TCP/IP, right, which we're using right now, Voice over Internet Protocol. And so, what's going to happen is there going to be multiple blockchains to start. And same way there were 80 protocols when the internet started in the 60s. And today we have basically 5 that we use: TCP/IP, FTP, SMTP, HTTPS, and www dot. And there are a couple other mini protocols, but basically we got the Fab Five. And so eventually we'll get down to, 5, 4, 3, maybe one. Maybe we'll live in the, one chain to rule all chains, like the Lord of the Rings world, where it's just Bitcoin and things on top of it. I don't know, but things like Hedera was early. Um, and then you got things like XRP, and you got a bunch of other L1s like Ethereum and Solana and Avalanche and Polkadot and Cosmos, and everyone's got their little tweak. And at the end of the day, there are a couple things that separate us into tribes. One is proof of work, which I tend to favor, versus proof of stake or proof of other, right? Proof of authority, proof of history, proof of whatever. I favor proof of work because it converts energy into value, which everything in the world has always been about that, converting energy into value. And so then you go beyond that into relationships. And you look at Ethereum and their tight ties to government agencies, and you look at XRP and their tight ties to WEF and some of the big organizations, and Swift system and the banking system. And look at JP Morgan, that wants it all to be on JP Morgan coin because they watched one of my favorite series from a number of years ago, Mr. Robot, which talked about Evil Corp, which is definitely JP Morgan. And you look at that and you say, well, which is going to win? Are we going to have public, like open source blockchains, or are we going to have private blockchains? I don't know if you've ever seen the video of Bill Gates, right? I grew up in Seattle, and it's kind of funny when you say the name Bill Gates to someone in Seattle, they're like the lawyer, the dad. The young guy was Trey growing up in high school. He was not Bill, and now he's Bill Gates. That's who everybody thinks about. But ultimately, he was on David Letterman in the mid '90s, basically trying to convince the world that we should all run on the Microsoft internet, intranet, not the internet, not this public free utility. He wanted to control it. Of course he did. And he had backing from the WEF. His aunt works at the WEF and all this good stuff. So, thankfully, Al Gore thwarted that, and we have an open and free internet, and we're all better for it. So the same thing's happening now. Is you've got people, you mentioned BlackRock, right? BlackRock, most powerful asset manager in the world. And they would love They would love to have private blockchains that they have, the ability to authorize who can use them. Can they, have a higher take rate than an open, public, immutable ledger? And so I think we're going to have this kind of battle, little skirmishes here and there for, you saw BlackRock say, well, we're going to do one on Ethereum and we're going to do one on Hedera and maybe they'll even announce one on XRP and maybe they'll announce one on Avalanche and maybe they'll announce one because they're going to throw a bunch of stuff against the wall, see what sticks, see which tech is best, see which one gives them the most. It's kind of like, remember when Google was formed, right? Google was the 21st search engine. They were not first, they were not best, but arguably they agreed to provide some things to the government that others weren't, right? Remember, you didn't want to use Gmail because they were going to read all your emails because, oh, no, that's not true. Yeah, it is. And so in so agreeing, maybe they got some advantages. Maybe they got some special treatment and maybe web crawler was better. Maybe Alta Vista was better, but it's not the best technology that wins. It's the one that gets critical mass first. And if the government's helping you, you probably get critical mass first. So is it possible that somebody cuts a deal with BlackRock and the Treasury and Ms. Warren and gets the inside track to create Fed coin or the digital dollar? Um, I hope not, because I don't want a private controlled network running a digital dollar where they can tell me how I spend my money, when I spend my money, if I can spend my money. The dystopian nightmare is you get paid on Friday, have a couple cocktails, you drunk text about the president, and you wake up and your bank account's 25% less, or your car won't turn on. That's all dystopian nightmare, but programmable money would let you do that. So again, really important question. We could talk all night about it, but not enough time for it. But it is such important. And one of the things, I'm I'm an answer guy. I like to talk. I got the gift of gab from my mom, and we called her Yak Yak Face because she could talk to anyone, anywhere, any place about anything. And I got media training one time, and the guy came in and he sat me down. And he asked me a question, so I started to answer. He said, "What are you doing?" I said, "What do you mean?" I'm answering the question. He said, "You never answer the question. You deflect and redirect and talk about what you want to talk about." I said, "Dude, I'm a dutiful firstborn. I will always answer your question." So, but the point of saying that is that answers are cheap. What's really valuable in this world are questions. And if you spend more time thinking about the great questions that you and Cole just asked, we'd all be better off. So I appreciate that.
Thank you, Mark, and thank you, Dominic, for asking another great question. Johnny, I do want to ask you another question, but let me just get one in here for Mark, because when we look at the market today, a lot of people are debating, is the structure of the crypto market changing, or are we going through another 4-year cycle? Now, earlier in this conversation, I think you answered it. You believe we're going to go into what we would call another 4-year cycle, with the market peaking somewhere between, and I don't want to put words in your mouth, but let's call it 100 to 180,000, and then going into another bear market after the leverage wears out.
Oh yeah, you can put words in my mouth. Look, it's so funny. I tell the story that my wife only seen me speak one time. She came to a conference in Vegas, and at the end of the talk, she said, "Mark, you can't say things like that." I'm like, "Wait, what did I say?" She says, "No, it's not what you said. It's how you said it. You say everything so forcefully." I'm like, "Well, what's wrong with that?" She says, "Well, people will believe you." I'm like, "Well, that's the whole point." She says, "Well, what if you're wrong?" I said, "I'm wrong all the time. I just change my mind the next time." So I will always stick to my guns. You ask me a question, I'll give you an answer. And so, yeah, I think we're running to 150 to 180. And then I do think we're going to have another crash because humans are going to human. We're going to get above fair value because leverage is going to enter the system and there's more tools for leverage. There are not as many tools for leverage, the true degenerate leverage, like the 100-to-1 stuff, as there were, because they've shut down some of the offshore stuff. But we're going to get leverage, and it's going to push prices way above where they should get to. And then the value investors are going to come in and short the other side. The little wrinkle here, and the reason I don't think we'll get quite as high as we have in the previous cycles. We went to 2.3 times fair value. So let's say fair value was 80. 2.3 would be right around 200. I don't think we get there because now we have so many futures contracts that the big dogs can use to go naked short and spoof the price, kind of like why gold is much lower than it should be today. Gold should be well above 3,000, probably closer to 4,000. But the JP Morgan and those guys spoof it in the London gold markets with the Rothschild clan. So and they've been fined like billions of dollars. I'm not speaking out of school. I mean, if you ask them, they'll tell you. Like, yeah, we make 20 billion, we pay $1 billion in fines. It's just the cost of doing business. So I do think that's going to happen here in this cycle. So we get a truncated top, but I do think the cycle will continue. And, sure as we're sitting here, crypto fall will start here, in probably May, June of this year. We'll run through kind of April, May of next year. And then we'll go into crypto winter again, and that'll last a year. And then we'll go into crypto spring, and we'll kind of, make new lows. And well, we won't make new lows. We'll make higher lows, because that's the key to all of this. Despite the volatility, right? Bitcoin has 80 vol. Volatility is Amazon stock, by the way. But we always make higher highs and higher lows. The network value continues to rise as more participants come in. And so, if let's say we get to 180, and then we go down 70% this time, because the drawdowns keep getting a little lower, 84, 83, 77. So let's say we get 70 this time. So that would take us down to whatever that is, say 120, 60 something. So that wouldn't be too bad. Let me make sure I got that math right. But 54. So I was close. So we trough at 54. That's way better than the trough of 15. And then we start all over, and we head toward that next leg, that's the leg after the 28 halving, where I think we get gold equivalents, which is kind of a, $5 trillion, $6 trillion market cap.
That's really interesting, Mark. And so the reason that I was asking that question is because this will be my second full cycle. I entered the market in January of 2020. The pandemic hit us. I took advantage. I bought some more cryptocurrency on the dip. I actually converted some stocks at that time. I feel very similar vibe, very similar sentiment to what we're going through right now. While the crypto community is really, really bullish, outside the mainstream media hasn't started pushing and promoting this stuff at a max scale yet. I remember what it was like in 2021, and I think it's going to be even more this year. But what you're highlighting, and what I think a lot of people should be aware of, is the reason we're hosting this space, which is executing in this market. It is so hard to hit the sell button, especially when you're profiting. And whether you're moving it into Bitcoin, you're cashing out on some of your alts, or you're cashing out on some of your Bitcoin and turning it into US dollars, what Mark just described is what we've seen 3 times. This market gets overvalued, and that's an opportunity for our community to capitalize on that. So that's why I want to really just hammer that home, guys. Test out Merlin, 30 days, absolutely free. Let us know what you like. You can create an exit plan, get tax estimates, figure out your profits and losses. But we're going to help you reach a financial goal, and I think that's what's important, Mark. A lot of times
Well, what's really brilliant about that, Abs, and again, Merlin's a great tool for this, is the Bitcoin market in particular, and ETH and others are equally good, but Bitcoin is the most amazing. Is if you go back in the history of markets, particularly in the U.S., in the 60s and 70s and into the 80s, there was a group of traders. Most of them came out of Chicago from the Mercantile Exchange and the pits, and they found that these quantitative strategies, the simple trend following strategies, actually worked. Well, why did they work? Well, again, humans are going to human. Humans do 2 things really, really well. We buy what we wish we would have bought, right? So we continue to push momentum further than it should go. And then we sell what we're about to need. So when things get to the bottom, we sell. And so they said, well, if I there are these indicators like the 20-day moving average or the 50-day moving average or the 200-day moving average, and you get this beautiful sell signal in markets way back in the 80s and 90s. and today in Bitcoin. And what happened to CTAs, commodity trading advisors, is it became less workable as the markets moved from human beings to computers, to high frequency. So I went to the New York Stock Exchange with my family a couple weeks ago and did a tour. And, when I was there 30 years ago, there were thousands of people and 70 market makers. Today, there were like 20 people in the whole building, and there are 3 market makers, and everything's executed by computers. And so computers are really, really efficient. And they, it's like the scene from Maverick, my favorite in the world. I've seen it like 19 times, where he's, Admiral Kane's talking to him saying, pilots that have to eat, sleep, take a piss, pilots that disobey orders. Leaders don't do that. They don't need to eat. They don't need to sleep. They don't need to take a piss. They just execute. And so the trends in the traditional markets started to fall away. And we actually run a fund that does this called the Risk Managed Bitcoin Fund. And so we're long Bitcoin when the momentum is positive, when the trend is positive, and then we go to cash when the momentum turns negative. You say, well, you can't time the market. You actually can. And in Bitcoin, you can actually really effectively, because there's this massive signal and it smacks you in the face. And Merlin lets you set those rules up. And so you get a ding, 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 ding. And I'm not familiar enough to know if it has auto execute, which would be really cool too, because then you could go to sleep and let it execute for you. But it is a great tool that allows you to have these rules that, again, they're not designed to day trade. They're there for the occasional, once every 4 years, big signal, and then they'll give you the signal on the other side, to start buying back in. So it's nice, and at some point, I don't know how many years from now, 15, 20, whatever, uh, we will get so automated, so systematized, and people will bring all of those bells and whistles and high frequency trading from the traditional markets into crypto. Um, but hell, I still, right, even though the ETF's been approved, I still can't buy the Bitcoin ETF in my UBS brokerage account because UBS has decided they're smarter than me. So we're a long way from equivalence to the traditional
But you know
markets.
what's great about that, Mark? I tell everybody we're in so early. I know it feels late, but we are in very, very early. And you actually nailed something so important about Merlin and exit strategies. At the end of the day, yes, auto execute is something on our roadmap. That is something we will be adding right now. We send alerts. But the cool thing about Merlin, what we want to try to educate folks tonight is when you come into this space, it's just so important to have an exit plan. And a lot of people come in when I talk to them, Mark, and they come in, but they have no clue when they're getting out. They don't even have a plan. Like, oh, I didn't even think of that. Like, oh, so you're gonna go in, but you don't know how you're getting out. It's just not.
Yeah, and there's a couple of points on that, Johnny, that are important. So one is we need to have different buckets, right? One thing about Bitcoin that's different than everything else, to me, Bitcoin is the ultimate savings tool. And when do you sell your savings? Well, you don't unless you need to pay for a big thing like a house or tuition or an emergency. It's like your house. Like, when do you sell your house? Well, when you move. So thing about Bitcoin is I look at that as my savings, and I only spend from that when I need to replenish my liquidity account. Now, I would say people should have 3 buckets. A liquidity bucket, 10 to 15% of your assets to fund your lifestyle. The get rich bucket, that's 10 to 15% for day trading and doing the friends condo deal. And obviously, you're going to lose all that, so just keep it small. And then the stay rich account, which is the middle thing, which is a diversified portfolio like an endowment or a foundation. And Bitcoin can take a big chunk of that as your savings. But in that get rich account, if you want to trade, use a tool like Merlin. Use it to trade, and don't be afraid of trading. Don't because these markets will give you good trades. There are cycles. There are human elements. You're seeing it right now in NFTs. Bored apes are down 90%, 90. Why? Well, people moved on to the next thing. They moved on to other NFTs and to ordinals and now to runes. And there's only so much capital in the world, and that capital is going to move around to different places. Does that mean that, Bored Apes are going to go to zero? Probably not. Would I buy one here? It's not my community. I like the on-chain monkeys community, but I think if you were thinking about being part of that community and they got new leadership, the guy's back to run it, that's interesting. But you also could look at Merlin and say, am I getting a buy signal here? Is the 20-day moving average moving up? Is the 50-day moving average moving up? Or is it still, distribution pressure? Because ultimately, humans drive markets.
Yeah,
And I love when people say, they're excess sellers or they're excess buyers. No, they're not. There's always the same number of buyers and sellers. The difference is the marginal price it takes to unlock the shares, right? If somebody doesn't want to sell, the only way they'll sell is if the price goes up. And the only way they'll buy is if the price goes down. Vice versa, if somebody's desperate for liquidity, they'll take any price to sell. So, the situation of the human drives the marginal instigator of the trade, buy or sell. But there's always the same number of buyers and sellers.
yeah, and I think what's important is, as we wrap this piece up about exit strategy at Merlin, is just understanding that you're right. Some things you want to hold with you to the future, and we know that there's over 12,000. This market's at 12,000 active coins, and some of those are definitely there, which will go up, and they'll have that 90% pullback, right? And we want to train and teach people to be exiting on the way up, because man, when it comes back on the down, you don't want to be on the downside. You all see how fast it comes on the downside. So, free 30-day trial, guys. Try it out. Go to www.merlincrypto.com and risk-free 30 days. You can cancel anytime, and right in the app. You don't have to get on the phone and try to figure out how to cancel or get pushed around here or there. It's just simple and done in the app. Mark, I have a question for you. Before you joined us, we had talked about speculation and utility. And where are we? And we had a big debate on it. I wish you were here for it. So I want to kind of bring it back up because I want to get your take. And I'm actually glad you didn't hear it because at least that we didn't we haven't influenced you. Where do you think we are today in the crypto market? Blockchain, an adoption for the world. Are we in speculation? Are we in utility? We talked about the 14-year typical to go from, speculation to adoption. Where do you think we are today in this new paradigm shift as we move to blockchain?
Well, so my thesis on the big picture, which is, we are at the very beginning, right? The national anthem has been sung. A couple of years ago, I was saying, they hadn't even sung the national anthem yet. The players just entered the stadium. So now the national anthem is sung, and the game is just about to start, right? January this year, 2024, was year one of, I believe, a 14-year tech cycle. The first one started in 1954 with the mainframe, the second 68 with the microchip, 82 with the personal computer, 96 with the internet, 2010 with the mobile net, and now 2024 with the truth net. So everything leading up to this since 2009, and really it goes back even further to 1988 when Tim May wrote the Crypto Anarchist Manifesto, which if you haven't read, you should read. It's really short, and he laid out everything that was going to happen over the next 30 years. The problem is no one actually read it because Tim May was an anarchist and he lived up in the mountains. He had no friends. So it took 20 years before Satoshi came along and put it in our consciousness in 2009. And again, that was not a mistake. It was not an accident that was released in the middle of the global financial crisis, and that the first entry, is actually a JPEG, right, on the Bitcoin blockchain, and the Genesis block is a picture, right, of the times where the chancellor is bailing out the banks for the second. The exchequer is bailing out the banks for the second time. So that's not an accident. And so now we are 15 years hence, and everybody says, "Oh, it's just for rampant speculation." Sure, there has been speculation, and there are lots of things that have no utility at all, right? I mean, if you think about the thousands of tokens, and what is a token, right? A token is an entry on a ledger. Well, what's a ledger? A ledger is a, like a database, right? If I'm a money lender, say I'm going to loan Johnny some money, I write down in my ledger he owes me money. He writes down his ledger, I owe Mark money, and then we ask Abs to referee to be the bank to make sure that the numbers match. The problem with that system, last 838 years, is that I can go bribe Abs and say I'm going to change my number, and you go along with it, and I'll give you half the profits. So that system was corruptible. Blockchains fix that. They're uncorruptible. They are truth. And that's why I call it the truth net. So we're moving from a trust industry to a truth industry. So we're just starting the implementation phase. And so Bitcoin. Bitcoin started as a science project. It started as peer-to-peer electronic cash. And, the guy bought the 2 pizzas for 10,000 Bitcoin. And everybody's like, oh, what an idiot. No, he's a mad genius. And we all owe him a debt of gratitude because he proved that 2 people who were anonymous to each other could transact and exchange value without an intermediary. For the first time ever, that happened. And that's amazing. It's truly amazing, right? The fact that you and I, Johnny, can exchange something of value without waiting for the bank to open in the morning, without waiting for the brokerage firm to allow me. Like I told the story when I was funding this thing at Metaplanet, UBS told me it was going to take 2 days to get the money to Tokyo. Like, well, what the hell do you mean 2 days? Well, we got to do this. We got to go through compliance. I'm like, no, you push a button and it goes. I mean, just don't give me 2 days. I said, just give me my money and I'll put it in a stable coin. I'll send it. Like, well, you can only take out 25K a day. I'm like, but it's my money. Oh, there's the mistake. It's not my money anymore. It's their money. So we live in this world where we're having to undo centuries, 838 years of this trust industry. And it's not going to happen overnight. And the institutions are going to fight tooth and nail, right? I said, 2009 to 15, first they ignore you. Bunch of nerds and geeks play with your magic internet money. 16 to 21, then they laugh at you. Bunch of nerds and geeks. Then they fight you. 22 to 27, they're going to fight us. And they're going to fight hard. And they're going to try to pass laws, and they're going to try to make self-custody illegal, and they're going to try to tax you. I mean, they're going to do all kinds of things to try to keep the incumbents in power. But at the end of the day, this technology is so profound. It is, I believe, the best invention of my lifetime. And that's saying something because I'm old. I mean, I've seen some big inventions, but I think this is the biggest. And it's because we are displacing trust with truth. And so we're at the very beginning of that cycle. So yes, there's been lots of speculation, and meme coins are pure speculation, but they're monetizing people's attention and their entertainment value and all that good stuff. And there are utility tokens that really are just that. I say I'm going to issue Mark coin, and everyone listening tonight gets the Mark coin, and I take the money and I go build a Chuck E. Cheese, and then I give you all the Mark tokens, and you come in and knock yourselves out playing games. What y'all should have done is said, no, we want to own a piece of the arcade. We want to own a piece of the action. But most utility tokens didn't give you a right to cash flow or equity or debt. They just gave you nothing. And once people figured that out, the ICO boom kind of went away. But those tokens live on, and some of them got memed, and some of them went up, and some went down, and some have just done nothing. But those are utility tokens that don't really have utility. They're kind of oxymoronic, like jumbo shrimp. Then you've got real utility, like Uniswap, where it's an exchange that does as much volume as Coinbase in a decentralized manner. And now the SEC is all mad about that, and they're trying to say, well, that's a security. Like, oh, please stop. They're going to get crushed, I think, again. But then you got cryptocurrencies. Well, there aren't very many cryptocurrencies. What's a cryptocurrency? Something can be used as a medium exchange or a store of value. There's Bitcoin, Ethereum, Monero, Dash, and a handful of others. And some are good, some are less good. I favor the proof of work. I think that's the most stable, most secure, most profoundly valid. But doesn't mean that all the others are no good. But at the end of the day, they're all vying for network effect. And the one that wins, or the ones, plural, that win will be the ones that get the network effect best. And so, like runes, right? What are runes? Runes are just meme coins on Bitcoin. Well, why does that matter? Well, Bitcoin's a bigger community than Ethereum or Solana. So in theory, meme coin should be bigger. Okay, maybe, but there have been like 8,000 runes etched, and what, 8, 10, 12, 15 will actually have meaningful value, and the rest will, flounder around and go to zero. But some could go to billions and billions of dollars of value because people want to be part of communities and they want to, monetize their attention. So yes, there's a speculative use case because we're dealing with value, but no different than any other boom in history, right? The gold boom had lots of speculation, good kind of speculation where people went and tried to acquire the asset, the bad kind of speculation where people printed up fake maps and sold them and robbed people on the way, and all kinds of, stole snake oil to fix your ills. And then we had the boiler rooms in the Roaring Twenties where you were pumping and dumping and doing all kinds of crazy stuff. And you got the Toronto Stock Exchange where, every day they come up with a new way to rob people by. I had a guy call me once from Toronto, said, "Yeah, we got this new company. It's called Cobalt Blockchain." I'm like, "Oh, tell me more." He says, "Well, we're going to use blockchain to determine whether the cobalt is from a conflict zone, like blood diamonds." I'm like, "Okay, that's actually a really good use case. How much cobalt you got?" "Well, we don't have any." Like, "Well, where are you going to get it?" "Oh, well, we bought this gold mining company and we're going to do a reverse merger and then we're going to go get some cobalt from the DRC. I'm like, "Okay, really? So you're basically going to fleece people," which is what they did. They raised $6 million and lost it all. So that's as old as time. And that's not new to Bitcoin. It's not new to blockchain. It's not new to anything. Wherever there's value in the world, there will be speculation. People will speculate on puka shells. They'll speculate on stone tablets. They'll speculate on ones and zeros in a bank account, or meme tokens. So the speculation part is a feature, not a bug, and it brings attention to markets. And then the utility phase is where we use the blockchains to create the next layer of computing. Ultimately, all computing will be done on blockchains,
Yep.
right? It won't be on CPUs, it won't be on GPUs or TPUs or VPUs. It'll be on blockchains. Not tomorrow,
No.
but again, that's like Maverick said, where Kane says, "Your kind's extinct, Maverick." And he's like, "Well, that may be true, sir, but not today."
Yep. Yep. No, I agree. Mark, one last question to you for me, and then I'll kick it to Abs, and then we'll wrap up. One of the things when we've had you on in the past, you've projected on what you thought this bull run, how big this market cap could get to. Raul Paul, he's been saying, as high as 12 trillion, I think, by the end of this bull run, and 100 trillion in the blockchain space or in the cryptocurrency market by, I think, 2030-ish or somewhere in that frame. Curious of what
Yeah.
your thoughts are. Are you in the same camp? I know last time we had you on, I think you were in the 5 trillion, but I'm just curious what you think we might see for market cap by the end of this bull run, and maybe by 2030, what your thoughts are there.
Yeah, I think this run will be lucky to get to 5. I mean, what are we at? 3.2, something like that right now. 3.5, 3.2.
We're
I
at
don't know,
2.3.
somewhere
2-3.
2.3. So, so we're halfway there. Um, yeah, 5 by next year. Yeah, that's certainly doable. 12, I think, is a stretch. Now, if you include the next 4 years to 2028. Yeah. Okay. Here's the thing. Web 1, right? The read phase created 2 trillion of value. Read write, Web 2, created 5 trillion of value. I believe Web 3 creates 15 to 20. Now, why do I believe that? Well, because we're not growing linearly, we're growing exponentially. And the best way to think about that is, everyone listening right now, if you took 20 linear steps from wherever you're standing, you'd go to the other side of the room, right? If you took 20 exponential steps, you'd go around the world twice. Everybody says, that's bullshit. I'm like, just do the math. I mean, it's just math. So that's profound. And so exponential curves, right, on the left side of the exponential curve, they're parallel to the x-axis, and the area under the curve, between the curve and the axis, is the amount, right? So we learned in calculus way long time ago. And then the knee of the curve, right, the bend, you start to increase that area under the curve, and it basically doubles about 2.5 times. Well, then you go perpendicular to the y-axis, and it's technically unlimited, but let's say that it's not truly unlimited. Do we go to 3x to 5x? I don't really know. And I said Murray will make the case that once reverse Gresham's law kicks in, that 100 trillion is in the bank because that's the value of all currency in the world. And as Bitcoin crowds out all of that, that's just Bitcoin alone. And then you got all the other stuff that's probably another 30, 40 trillion on top of that. So it's easy in hindsight to see what happened. It's harder Rory to think what's going to happen because most of us are really bad at imagining the unimaginable. Right? The average person didn't buy as much NVIDIA as they possibly could the first time they saw, an NVIDIA graphics card in their son's computer. And like the first time I saw Fortnite, I'm like, Jesus Christ, that is unbelievable. That render engine is incredible. I should have just bought every share of NVIDIA I could have, right? Because they make the GPUs. And I should have bought some Epic Games too, but it was private. But the key is it's hard to imagine just how big and how profound these moves are in real time because they sneak up on you incrementally. In hindsight, everybody is a genius and woulda, coulda, shoulda. But the fact that you guys are here at 10:30 at night on a Tuesday talking about it is testament to your dedication and your passion for the industry and the leadership you show with all the people that follow the show and follow the organizations that you guys are building. And it's been a blast years and being people who do. One of the things, and I don't mean this in any braggadociously, but people come up to me all the time and say, "Oh, you changed my life." I'm like, "Nope, I did nothing." "Oh, but you told me to do." I mean, I didn't tell you to. I talked a lot about Bitcoin and I said it was going to be big, but you, whoever that person is, went out and bought or did or started or built. I didn't do shit. So the people that do are the ones that deserve applause and the admiration, and the people that can envision the unimaginable and can see the future. Those will stay up till 10:30 on a Tuesday listening to people like me, ramble. I appreciate it very much.
Thank you, Mark. And I know we're going to close it out here, but I got to ask one last question. Earlier this week, and this is a lighthearted question, of course. Earlier this week, you challenged or at least put Peter Schiff's opinion to the test. $1 million, 5 years, gold versus Bitcoin. I'd love for you to adjust. Did he ever get back to you, and what's the status on that?
Hell to the no, and he never will. I mean, look, he's a chicken shit, and I'll say that loud and proud. Look, we've done this twice. December 6th, 2018, I was on CNBC, and the price of Bitcoin was $3,200. And the day before, Pomp and Jason and I had issued the Morgan Creek Bitcoin Challenge. And I actually called Warren Buffett. Someone gave me his phone number, and I called him in his office, and he answered his own phone, which they said he did, and he did. And I talked to him about it, and he said he'd think about it and get back to me. And the challenge was $1 million charity bet, like he had done with hedge funds. And we would take Bitcoin, and he would take the S&P. And he wrote me a nice letter saying, I was thinking about it, but they tell me that I'm too old, and Like, well, that's kind of BS because we're going to put it in a trust and it'll mature in 10 years. And even if you pass, but I don't think you will, you'll be chasing my scrawny ass around the desk 10 years from now. But even if you were to pass, someone could take care of it for you. But that's fine. You don't want to do it. And so I went on CNBC and said, I issued this challenge and Warren declined. And anyone who wants to take it, you're on. And we got one guy. There was one older guy who had started an asset management firm in New York, and he called and said, "Yeah, I'll take it." And his son, who very successful guy, runs a big podcast, said, "Dad, no freaking way are we doing this. No, there's no upside. If we win, we were supposed to win. If we lose our business. No, we're not doing it." So no one took us up on it, which is a good thing because we would have kicked their ass. And Schiff's not going to take it either. But I'm so sick of his bullshit. And I know it's an act. I know his son owns a bunch of Bitcoin. He probably owns it personally. I know it's engagement farming, but it just pisses me off. But he doesn't even have the guts to engage and decline the offer. In fact, what I was going to do is I was going to turn up the heat because he said that we're talking about the halving and all you Bitcoin holders, your network's going to have. And literally from the time I issued the bet on Friday night till Monday morning, I had made more than the bet. And I said, you know what? I'm going to double the bet and I'm going to double it every day until it's half your net worth, Peter. And then we'll talk about the halving when you lose. But
yeah, he ran scared like a chicken. Unfortunately, I don't think he's ever going to put his money where his mouth is, Mark. Because, like you said, he probably doesn't believe it, and his kid has probably told him to. Dad, think about this, Mark. This is the first time I tell everybody this in our lifetimes, all our lifetimes, that we finally have an asset that call the store value, whatever it's going to end up playing as its use case. But it's the first time in our lifetime ever that we'll have a finite asset. We've never had this before. Think about it. Gold, we mine it, we find 2% a year. Silver, we mine it, we're always adding it. Real estate, we're building new houses. Fiat, we're printing that shit every day. So this is the first time in our lifetime that we have an asset that if the world decides, this is going to be digital gold and next store value, well, it's finite. We only have 21 million, arguably maybe 17 million accessible if some of it's locked up and gone, right? 17 million coins being chased by, I don't know, maybe 2 billion people maybe come into the space, maybe 3 billion, somewhere in there. Imagine that. So to me, it would be...
and that's why we're going to go to Satoshi. Someday we won't talk about...
Yep.
We won't talk about the price of Bitcoin. We'll talk about Satoshis. And a single Satoshi someday will be worth $1. Because the thing, I'll leave you with this last thought, and you guys know this, but everybody says all the time, Bitcoin price is going up. No, it's not. 1 Bitcoin equals 1 Bitcoin. And 1 Bitcoin will always be 1 Bitcoin.
Yep.
But we don't price Bitcoin in Bitcoin. We price Bitcoin in dollars and yen and euros and Zimbabwe dollars and Argentinian pesos. And that's why there's never been a bear market in Turkey for Bitcoin, because the lira is a piece of toilet paper. There's never been a bear market in Venezuela for Bitcoin because the bolivar is a piece of toilet paper. And ultimately, same thing in Japan. We've been making new highs in Japan for over 2 years because, currency's gone to 155, I think, at the last check. So at the end of the day, assets that are pure stores of value don't appreciate. They hold their value against other things that devalue. And global currencies, fiat, which can be created out of thin air by corrupt governments. Look, if our Congress can vote to send $100 billion of money laundered money to Ukraine and Israel with no checks and balances, I mean, and what do? They don't have the taxing, they don't have the taxes to pay for it, so they're going to print it out of thin air, which means the price of Bitcoin will rise. And as long as we leave those people in power, they're going to keep doing it. And every empire in history has ended the same way. Every single one. Unchecked power at the top, leading to a massive devaluation of the currency. And at the end of the day, the scarce assets hold their value. And you're right, we have the perfect scarce asset today. We had one other perfect scarce asset, which is collectible Porsches, but Jerry Seinfeld and Jay Leno buy those all. So we got to settle for Bitcoin.
And those aren't as easily accessible, right, Mark? One quick
No.
comment there is that Peter Schiff's marketing that he did a couple of weeks ago, it was phenomenal, right? When he went on to all these different podcasts. Would you ever consider doing anything with Patrick Bet-David if they ever reached out to you?
Oh, I'll do anything. You know me. Ask me to talk, I'll talk.
There you have it. That was just the question that I had. Thank you so much, Mark. We can't thank you enough for the time. And I don't know if Johnny has any closing comments, but Jeremy, the floor is yours.
Before you do, I just want to say thank you personally to Mark. Thank you so much for coming and joining us tonight, Mark. Love it as always. It's always wonderful having you on board.
All right, guys, we'll see you soon. I'm going to sign off. Thanks for having me. Talk to you soon.
Thank you.
Appreciate it. Thank you, Mark.
Thank you so much, Mark. Everyone give a round of applause for Mark Yusko. You can follow him here on the X app. And I have been your commentator or host this evening. My name is Jeremy Quintanilla. I am the Chief Finance and Operations Officer for Merlin, the smartest way to track your crypto. You can follow me on social media at Age of Jeremy, everywhere you get your social media. The Spaces host this evening is Abs, Merlin Senior Engagement Specialist, and he is also the host of the Good Morning Crypto Show. The Good Morning Crypto Show comes to you Monday through Friday at 11 a.m. Eastern from the 3T Warrior Academy YouTube page. You can follow Abs right here on X at 3TGM Crypto, and also all the great people that came up and spoke this evening. Show them some love. Make sure that you follow them. If you weren't able to get your question answered or asked tonight, please tune into our next Merlin Spaces. We will be having them once a month. And we also have a live Q&A for anybody that has questions regarding Merlin on our Merlin YouTube channel. So head on over to YouTube and check out the Merlin YouTube channel at Get Merlin Crypto or at Merlin Crypto. And again, these spaces are brought to you by Merlin, the smartest way to track your crypto. Not only can you use Merlin to track your coins across wallets and exchanges in one simple, secure web app, Merlin also allows you to set up exit strategies for your coins, so you know when it's time to sell. Please follow Merlin here on X. You can also follow Merlin on LinkedIn at Get Merlin Crypto. Again, that's at Get Merlin Crypto, and on Instagram and Threads at Merlin Crypto. And with that, here's Johnny's favorite beat of all time to close us out.
There it is. Thank you, everybody.
Thank you for tuning in to the Merlin Crypto Market Update located on the X app. I'm Abs, your host and Senior Engagement Officer at Merlin, and we hope you enjoyed this episode from our Merlin X Spaces. Remember, you can catch us live every other Tuesday at 8:30 p.m. Eastern on the X app at Get Merlin Crypto. If you want to take your crypto tracking to the next level, don't miss out on our free 30-day trial at merlincrypto.com. Thanks again for listening, and we'll catch you in the next episode.